Folks, buckle up, because today we're diving headfirst into the economic clown show that is Donald Trump's tariff tantrum of 2025. You thought the Great Recession was bad? Well, grab your popcorn, because the Trump administration is giving us a masterclass in how to tank the economy, spook markets, and pretend everything's in great shape while the world burns. This is Boss Economics World, where we don't just analyze the numbers, we roast the policymakers who think 10% is a floor, is sound economic strategy. Let's get into it. Ladies and gentlemen, if you've been paying attention to the financial markets, or even just scrolling through X, formerly Twitter, you've probably noticed the chaos erupting over President Trump's latest tariff threats. On April 11, 2025, aboard Air Force One, Trump casually dropped a bombshell that his 10% tariff on most U.S. trading partners is pretty close to a floor, with a couple of exceptions for obvious reasons. Translation: I'm making this up as I go, and you're all along for the ride. Oh, and let's not forget the 145% levy on China, because apparently, the world's second largest economy is just a punching bag for Trump's economic machismo. Now, for the uninitiated, tariffs are taxes on imported goods, and Trump's been waving them around like a magic wand, promising to bring manufacturing jobs back to the U.S. and fill federal coffers with revenue. Sounds great, right? Wrong. Here at Boss Economics World, we don't swallow government fairy tales. Let's break this down, layer by layer, and show you why this tariff tantrum is a one-way ticket to economic disaster, and why the government's mismanagement is to blame. First things first, let's debunk the myth that tariffs are some kind of genius, America First strategy. Trump loves to frame tariffs as a way to punish foreign countries and protect American jobs, but here's the dirty little secret: tariffs are taxes on American consumers and businesses. When you slap a 10% tariff on imports, or a jaw-dropping 145% on Chinese goods, those costs don't magically stay overseas. They get passed on to you, the consumer, in the form of higher prices. Let's look at the data. According to a 2024 study by the National Bureau of Economic Research, NBR, the 2018-2019 Trump tariffs cost American consumers and businesses an estimated $40 billion annually in higher prices. Fast forward to 2025, and Bloomberg Economics projects that Trump's latest tariff hikes could drive up the average U.S. duty rate to historic levels, threatening $690 billion in U.S.-China trade alone. That's not winning, that's economic self-sabotage. And who gets hit the hardest? Everyday Americans. Take the price of electronics, for example. About 80% of U.S. consumer electronics are imported, with China being a major supplier. A 145% tariff on Chinese goods could send the price of your next smartphone or laptop soaring by 30–40%, according to estimates from the Consumer Technology Association. So, while Trump's busy bragging about great shape markets, you're stuck choosing between paying $1,500 for a new iPhone or sticking with your cracked screen relic from 2020. Thanks, Mr. President. Now, let's talk about the financial markets, because if there's one thing Trump's tariff threats have accomplished, it's turning Wall Street into a roller coaster that would make Six Flags blush. The week of April 7, 13, 2025, was a textbook example of market mayhem. Trump announced sweeping tariff hikes, only to delay them hours later after seeing the S&P 500 convulse like it had just seen a ghost. And let's not forget the bond market. U.S. 10-year Treasury yields saw their biggest weekly surge in over 2 decades, signaling investor panic over inflation and economic uncertainty. But hey, don't worry, folks, Trump's got it all under control. On April 11, he shrugged off the turmoil, saying, "I think the markets were solid today. I think people are seeing we're in great shape." Oh, really? Solid? Tell that to the hedge fund managers who lost billions in a single day, or the small business owners who rely on stable trade policies to plan their supply chains. This isn't great shape, it's a government-induced mess. And here's the kicker: the Federal Reserve had to step in and signal it was ready to help stabilize markets, if needed. Translation: the central bank is on standby to clean up the government's mess, yet again. Remember, the Fed's job is to manage inflation and unemployment, not to babysit a president who thinks tariffs are a negotiating tool. According to the latest data from the Bureau of Labor Statistics, BLS, U.S. inflation is already running at 4.2% as of March 2025, well above the Fed's 2% target. Trump's tariff hikes could push inflation even higher, forcing the Fed to raise interest rates and choke off economic growth. Recession, anyone? Now, let's zoom out to the global stage, because Trump's tariffs aren't just a U.S. problem, they're a global economic threat. China, the world's second largest economy, isn't exactly sitting idly by while Trump slaps a 145% tariff on its goods. On April 11, 2025, Beijing retaliated by raising tariffs on all U.S. goods to 125%, on top of an existing 20% tax. And they're not stopping there. China has vowed to fight to the end with other countermeasures. Gee, I wonder what those could be. Maybe dumping US treasuries, devaluing the yuan, or cozying up to Europe and Asia to form trade alliances that exclude the US. Here's the reality, trade wars are a lose-lose proposition. According to the International Monetary Fund, IMF, the US-China trade war of 2018-2019 shaved 0.8% off global GDP growth. Fast forward to 2025, and the stakes are even higher. The World Trade Organization, WTO, estimates that Trump's latest tariff hikes could reduce global trade volumes by 3.5% over the next 2 years, pushing the world economy dangerously close to recession. And let's not forget the human cost. Oxford Economics projects that a full-blown trade war could lead to 12 million job losses worldwide by 2027, with the US losing 2.5 million of those. But hey, Trump's optimistic. On April 11, he told reporters, "I think something positive is going to come from the trade fight with China," calling President Xi Jinping a very good leader, a very smart leader. Oh, sure, nothing screams positive like a $690 billion trade standoff and the threat of a global recession. This isn't leadership, it's economic brinkmanship, courtesy of a government that prioritizes political posturing over sound policy. Now, let's talk about the US dollar, because Trump seems to think it's invincible. On April 11, he boasted, "If a nation said we're not going to be on the dollar, I would tell you that within about one phone call they would be back on the dollar. You always have to keep the dollar." Really? Because the data tells a different story. The US dollar's status as the world's reserve currency is already under pressure, thanks in part to Trump's erratic trade policies. According to the latest data from the Bank for International Settlements, BIS, the dollar's share of global foreign exchange reserves has fallen from 71% in 2000 to 58% in 2024. And guess what? China, Russia, and other nations are actively working to reduce their reliance on the dollar by diversifying into euros, yuan, and even gold. In 2024 alone, central banks purchased a record 1,136 metric tons of gold, according to the World Gold Council, as a hedge against dollar volatility. Why does this matter? Because the dollar's dominance is what allows the US to borrow cheaply, finance its massive deficits, and maintain its status as the world's safe haven. If Trump's tariffs push trading partners to ditch the dollar, the US could face higher borrowing costs, a weaker currency, and a full-blown financial crisis. But hey, no worries, Trump's got it all solved with one phone call. Sure, Jan. Here's the bottom line, folks, the economic chaos we're witnessing isn't just about tariffs, it's about government mismanagement on a grand scale. The Trump administration's approach to trade policy is a textbook example of how not to run an economy. Instead of fostering innovation, investing in infrastructure, or addressing structural issues like wage stagnation, the government is resorting to protectionism and saber-rattling. And who pays the price? You do, through higher prices, job losses, and market turmoil. Let's not forget the broader context. The U.S. national debt is now at a staggering $36 trillion as of April 2025, according to the U.S. Treasury Department, with a debt-to-GDP ratio of 135%. Meanwhile, income inequality is at its worst level in decades, with the top 1% of Americans holding more wealth than the bottom 90%, per the Federal Reserve's 2024 distributional financial accounts. And what's the government's solution? More tariffs, more debt, and more empty promises. So, there you have it, folks, Trump's tariff tantrum is a masterclass in economic mismanagement, threatening to tip the US and the world into recession while pretending everything's in great shape. Here at Boss Economics World, we're not buying it. We see through the smoke and mirrors, and we're calling out the clowns in Washington for what they are, reckless, short-sighted, and utterly clueless about how to run an economy. To our audience, whether you're an everyday American worried about your finances or a finance professional trying to navigate this mess, here's our advice: brace yourselves. Diversify your investments, hedge against inflation, and don't trust a government that thinks 10% is a floor, is sound economic policy. And most importantly, keep watching Boss Economics World, where we'll continue to expose the nonsense and fight for economic sanity. Until next time, stay sharp, stay skeptical, and remember, the real boss of economics is you, not the clowns in DC. Peace out.